Okay, so now we're recording. So to answer, this is why I really need to just hit record right off the bat, because you can edit anything out you want. But the whole purpose of this, Mish, you were just asking me right before I hit this, was what do we want to share with our audience, all that fun stuff. So let me just do a quick introduction. So this is Joseph Gissy. I am with, basically, this is my own podcast. Everything I'm talking about has to do with finance, fitness, and positivity. You had a great way of saying it. We need the balance, the mind, body, spirit, in order to really be successful in life. Ultimately, that's it. I'm breaking it down into those three subjects. So I have some people that are going to be on this podcast for that are more financial, oriented. We're going to have some people that are more fitness. I'm actually one of the people that were one of the persons that was my personal trainer is actually on with me Wednesday. And then we're going to have some people that are just about positivity. I know some people that no matter what's happening with life, they're just good. And the purpose of this is building the brands. It's building the Joe Gissy brand. It's building the Michele Schneider brand. It's going to build the Tactiv brand. It's building the Market Gauge brand. It's building awareness. And the best thing about podcast mediums is we can go off on little tangents. We can talk about things that maybe they wouldn't normally see when you're on TV or when you're on a certain medium. And my goal for you, for Michele Schneider, is that you can reuse this and people get to know more about you personally, because I feel like if they understand more of your background, because you get 60 seconds on air, 2 minutes on air, whenever you're on with somebody, they get to see how smart you are. They know how well you know the market. But I think the connecting of you with consumers is what's really going to make them a big fan of Market Gauge, which ultimately will help hopefully bring people to Market Gauge, bring people to Tactiv, and the relationship between Tactiv and Market Gauge. So Tactiv, for those that are just finding out about us, so we have a platform that we help service financial advisors, we help build their businesses, and we connect individual investors to advisors through our platform. And we've created an auto investing, you can call it a robo advisor, but it's a place where people can invest their money and have it grow for them through either an advisor relationship or an auto, robo advisory relationship. And we're constantly evolving that. So what we're talking about today, we could have a completely different product a year from now. We're just trying to connect people, give them as much of a guidance to being successful one way or another. And the awesome thing about Market Gauge is that Market Gauge is one of our partners. You're one of our core strategies on the platform. And then I have you, who happens to be one of the brainchild, children of Market Gauge, right? That's like I wouldn't say the magician behind the scenes, because you're definitely in front of the scenes and you're out there. So that's really what this is all about. That's why Tactiv, that's why I wanted you on here. Plus, a lot of advisors love your stuff and they want to get to know you personally. That helps them feel comfortable about you guys as a strategist, right? Understanding who you are. All this stuff just helps. It's not just about, you could have the best strategy in the world. And by the way, I really believe the Market Gauge has some of the best strategies in the world. But it's about getting the messaging out, relating it to people, and they can see that they have access to this stuff. I used to call it hedge fund strategies, but the masses don't know they have access to these hedge fund type strategies. And people think that hedge funds are only reserved for the elite and the wealthy. And that might've been true in the past. But I think nowadays, given the type of research, especially that Market Gauge produces and the type of methodology that you guys do as far as how you do trades in the market and how you view the market, definitely could have been a big hedge fund, but nowadays you're giving it to the people, right? So hopefully that helped out a little bit. So did that help round it for you, Mish?
Yes, and you've made so many good points. I'm going to try to remember
keep that
everything
going.
you just said to try to make points on. But let's start with the last thing you said first. So it's so interesting. I've been in this business for a very long time, and I started out in a business of helping people because I have a master's in special ed. And I wasn't just a classroom teacher, and I shouldn't say just a classroom teacher because they're so important, but I was a consultant to school districts all around the country in employing inclusion. And I use the word inclusion because that spirit that has really driven, I think, me and all of Market Gauge as far as what you just said, which is not just focusing on making tons of money through trading, but taking a lot of those profits and then reinvesting it in our own company for education so that it can be inclusive to everyone. And that's one of the reasons why I was so excited when we started to merge with you and your ideas, because that's exactly what you just said. Tactiv is all about taking hedge fund strategies and making it inclusive and accessible, two words I used a lot in special ed, to the masses. And that's really exciting. We've already seen the trend, right? The retail investor has become a bigger and bigger player in the markets, starting with COVID, being able to be home, get stimulus money, however they got it, it doesn't matter. The fact is that what was really, I think, understated in the media was how motivated people were to use the markets as a means of making money. And it is the great equalizer. When I went down to the Commodities Exchange and I was a young girl who had no money, the markets are really the last bastion of pure capitalism, in that it doesn't matter who you are, where you're from, what you have, what planet you've emerged from. Everyone has the same opportunity to make money in this environment. And I think that when you say evolving, that is exactly how we've evolved. This is how Tactiv and you are evolving, and it's been an incredible journey as being sort of the face of all of this, because my job is to really continue to make it accessible by explaining what people should do outside of what everybody else tells you to do, because everybody basically says the same things over and over and over again, and people jump in blindly without any experience or knowledge. And I try to give them at least some substance, some kind of a foundation, so that they make these decisions, they understand why.
Sorry, it's funny. I saw, I think that was your dog at the office there. I don't know if you hear in the background, which at some point I'm going to fix my podcasting studio to be in my basement. But if you hear Cooper in the background, can always edit him out. But
hey, inclusive. That includes dogs, of course.
Yeah. Well, and that's the beauty of being able to do this and reach a lot of people, is you can do this from your home. And I mean, look, you're in Santa Fe, I'm north of Chicago. And, I feel blessed just because my vision, actually, when I started Tactiv and as a financial advisor, kind of transitioning my practice, was to do everything from home. Even prior to starting the family, with that on the horizon and knowing I was going to have a little guy coming. Well, I didn't know I was going to have a little guy, but thinking at some point I would start a family, could have a boy or a girl. The goal was to sit here and work from home. And that's what we get to do now. And COVID definitely changed that for everybody. And you brought up a good point that, however they got their money, people started working on the markets, and that really started happening during COVID in a manner that had never happened before. I mean, it was unprecedented what was going on with, I actually think Robinhood was a good thing, so you could say yes or no on that, but I think it brought a lot of people into the retail market because it made it accessible and easy. Where a lot of times maybe they thought it was too, it was scary to go down to Merrill Lynch or your local bank or go to Morgan Stanley. Half the time they wouldn't even take you because you didn't even have enough money. Right. I remember actually when I was doing research to become a financial advisor, I did go to Morgan Stanley. I did go to Merrill Lynch. I gave them the story that I just inherited a bunch of money from my grandparents and I needed something to do with it. And it was funny, if I walked in originally, they looked at me and they pretty much just assumed I had no money, which was true because I was giving them a story just to do my research. But at the same time, as soon as I changed and said, "Oh, I inherited $500,000," it was like, "Oh, well, we can help you, and that's our minimum." And it was just a different. It was just interesting how all that worked. But going into how the sentiment has changed and how the retail investor has really come to the front of everything, and how this is the great equalizer. I heard you use that term too. What does it mean for retail? What does it mean for retail investors right now? Because you're so on to the current environment. what does that mean? And I know nobody has the crystal ball and you can't tell us what's going to happen over the next 6-12 months. But like, what does it mean for them right now? What should they be doing? You know, I mean, people are scared. They don't know what to do. Oh, wait, one more caveat. Sorry, I keep adding more to you.
Sure, that's okay.
I just did a small video because I was talking to one of my good friends, and advisors don't know what to do. He literally sat down with his advisor. Now he's got a few $1 million with this advisor. And he said, we really aren't in the market right now. Should I put some money on the market or should we stay on the side? What do you think we should do? And the advisor said to him, she goes, I'm not quite sure if the market's going to go up or down. I'm trying to be cautious. What do you think we should do? Because that's what I'm paying
kudos
you
for honesty, because most of them aren't, and certainly no offense meant, but one of the things that I've experienced over the last, almost 2 decades is listening to advisors tell people, don't worry, don't worry, don't worry. The market always comes back. Buy the dip, things are cheap. Buy what you know, all of the different platitudes that you hear over and over. So to get back to your original question, what should the retail investor do right now? Well, there are different types of retail investors. And I think one of the things, if you are already in it or thinking about getting into the market in one way or another, is really kind of decide what kind of investor you want to be. And I say that because there's tremendous opportunities in the day trading space. You have obviously the meme stocks that came out of the whole COVID, and even though they've kind of died, now you have ODTE, which is the one-day options expirations. The ability to day trade, and I mention that is because that's how I got started. I started out as a day trader, and it's a really great way to learn, but you don't have to day trade everything. So the next thing is, if you decide you want to be a day trader, pick one thing and get good at that one thing. And so for me, when I started, it was in coffee, sugar, cocoa exchange. And it's interesting you mentioned Merrill Lynch, because I got 2 jobs on the same day. I got a job working for Merrill Lynch as a clerk, which means I was running orders from the brokerage houses into the pits, or Conti Commodities hired me as an actual analyst for coffee, sugar, cocoa. And I took that job, even though I knew absolutely nothing about coffee, sugar, or cocoa. I was coming really basically from schools.
Sure.
The point is that I knew that if I became an analyst, I would be forced in my job description to tell people all over the world, the brokers all over the world, what was happening in these markets. That would force me to learn. And so I became a specialist in coffee, sugar, cocoa, right? And then I started to trade. They made me a member. So, and obviously the floor is an environment that is completely 100% all 5 senses immersed in trading. And at home, we have distractions. But the takeaway is to become a specialist in one thing and decide what your initial time frame is. And I never paper traded, by the way. That's the other thing, is I never paper traded. I always put real money on the line, because it's the only way you really learn about yourself, is how you take a loss. When do you get out of a win? What emotional damage or what emotional accolades you get for yourself, depending on the trade, how much it actually impacts the rest of your life and the rest of your day. The only way you're going to do that is with real money. So that's the first thing with retail investor. And I'll get to what I would do now. Some retail investors, though, want to be more passive investors because they've been told that passive investing is the way to go. And if you're 25, yeah, maybe, when you have a really good dip in the market, it's a good opportunity to buy some stocks and put them away. But if you're 65, not so much, right? Because you may have to wait 10, 15 years. And if you need that money and you have to sit through a 20, 30, 40% decline in the market, that's going to sting. So if you're going to be a passive investor and start building up a 401 or an IRA, then I think this is really where it's important to learn, again, something about cycles, whether it's through moving averages on a monthly basis, moving averages on a weekly basis, moving averages on a daily basis, understanding that when things are trading underneath key moving averages, trend is down. When they're trading above, trend is up. And if you just look at examples of that over and over and over again, you can actually start to make better decisions about what you want to do in terms of your passive investing. And if you just want to be more of an active swing trader, then that's a whole other lesson to learn, because the most important thing in that case is your risk versus your reward. If you're going to be in a trade for 2, 3, 4 days or a week or 2 weeks, you better have some kind of a formula for your risk reward. So you want to at least know that if you're going to risk, for argument's sake, $1, then you really think that's because you can make $2 or a 2-to-1 risk reward ratio, because otherwise you can be throwing a lot of trades out and still finding yourself losing money, or when you make money, not making nearly enough to cover your losses. So this is a strategic business. This is not just throw a dart, unless you're lucky on a big momentum day as a day trader, and you're even smart about that, because if things start turning around, you know to get out. And there's a lot of room here. There's a lot of room to learn.
So I would say, touching on a couple of those aspects. One, probably not throw your life savings at it to start. That's probably a good idea. I actually just watched a Netflix special on the meme stocks, and there were some people, they were throwing literally their life savings at GameStop. Not a good idea. Probably start with something small. It's not gambling, Also, I mean, I guess the way I always looked at gambling, and the way actually that I got into this as well, was I would take some money that I could afford to lose, and I would consider it education. So if I'm going to say I'm going to use $100 and I'm going to get into a trade, or I'm going to learn how this stuff works, I am fully understanding that $100 is at risk, because I'm trying to educate myself on how this is going to work. Unfortunately, not everybody looks at it that way. They're trying to make the quick buck, which I think was kind of the mania that got people in. So the question I have for you, Mish, is what's the shortcut to win in the market? If there is a shortcut, are there any?
Well, listen, I came from a completely different situation, because I could not afford to lose money. I borrowed $2,000 to get my first trading account going on the exchange from another clerk, by the way. It wasn't even a broker who gave me the money. It was another guy that I used to clerk with. And when I say clerk, I mean, he would stand there, and he was trading outside the pit, which at that point was quasi legal, right? So anyway, for me, since I had the mindset of I can't really afford to lose, that doesn't mean that I didn't accept the fact that I was going to lose, but I had to really build slowly enough capital where I could take larger and larger risks as time went on. And I started at an amazing time. So the other lesson is to know what type of market you're jumping into. When I started, it was the start of inflation, where gold and silver and sugar and many other commodities, and eventually oil, I started to trade oil, went way up. So it was easy to make money. So this gets back to the advisor who doesn't know what the heck to do right now. It's not so easy to make money. So if you're just getting right now in this environment, because we're in a trading range, we have people who think we're going into a massive recession. We have people that think that we're going into a massive hyperinflation. And then we have people who are sort of in the middle, which is kind of where I'm at, which is more of a stagflation environment. So that means that if you're not in 2020, 2021, where basically you threw a dart and everything went up and it was easy, if you understand where you're at, I was lucky. I was in an environment where if I bought sugar futures, they were going to go up. Even if I had to sit with a little loss for like a minute, it went up eventually. But this is not what we have going on right now. So I would say if you want to make money, find out what's trending and just stick to that. And when that stops trending, find the next thing that's trending. There's always something trending. So for the last several weeks, tech has been trending. Now, as we're coming into this week, when we have CPI, PPI, and FOMC, with a lot of data coming out at the market, tech is starting to go down. So basically, this is what I mean. If you're saying, wow, everybody's buying Apple at 150, and if it gets down to 148, I know I'm wrong, but if it gets up to 165, which it did, I'm going to get out. That's great. But now Apple's dead. So now you go to something else. And that's how it was in commodities. Once sugar died, I looked at coffee. Once coffee died, I looked at silver. When silver died, I looked at oil. Once oil died, I looked at cotton. Whatever was trending. And the environment was such that I didn't have to study, I could hear it, right? So that's why momentum is so important. And even though you're not hearing the noise, watching the ticks, you can certainly see the momentum coming in with things like volume, open interest, whether something is accumulating in terms of it's closing higher one day after the next on a higher volume situation. So this is why it's so easy to get stuck and stubborn and say, this owes me. I lost money and this owes me, but it's much better to go on to the next thing. And then if that dies, go on to the next thing. And if that dies, go on to the next thing. And if everything dies, pull back into cash and sit and wait. But something's always trending somewhere, and learn how to go short. That's the other thing. One of the things that ODTE traders are doing well, and even though these fads always scare me because they never last too long, because that's what they are. They're fads. They're not based on anything really foundational, but they buy puts and they buy calls on trending days. So that's the other thing is commodities traders, to go short. If something is trending down, they used to say, right? You take the staircase up and the elevator down, you can make a lot of money on the downside. It's anti-American, but yet we're here to make money, right?
Yeah.
So that's the best thing I can say.
So I'm listening to you, and I've seen you on TV quite a few times. Used to get a lot of emails about it from some of your fellow employees and co-owners and everybody there. Marky Gage. So you started on the floor, but how did you get so good? Because you can see the economic trends and you're seeing a larger picture than what most people would be doing when they start. Like, how did you build your foundation off the trade floor?
Well, that's a really good question. Well, first of all, I was fortunate because I had a husband and a very good friend in the business, and that would be Keith Schneider and Jeff Bish, who were both working very, very hard to create tools to help see trends as they were emerging based on different scans. Oh, I'm sorry about the dogs. Speaking of dogs.
Yeah, it happens.
Speaking of Marky Gage family, this is Jennifer coming in with her dog. So the dogs are all coming in to say hello. Anyway, getting back. So while I was really trading mainly futures, in 1980s, I started switching over more to the SPY because it was clear that the commodities were dead. See, this is what I mean. It's like I could have sat there and beat myself over the head, continuing to try to trade gold and silver, but they were dying. Crude oil eventually took another big run, obviously in 1990 with the Persian Gulf War. But it was SPY was starting to happen now because the inflation period was over and we were starting to see some economic growth in the 80s. We had Reagan, then followed by Clinton, and that was a really good period for the US. So that was one thing that you could see that if you just know where to look. But what Keith and Jeff were doing was they were creating tools. So they were talking about things like phases, right? So they could look at two major moving averages, like a 50 and a 200-day moving average. And based on existing research, and by the way, phases was something that had been talked about since the mid-1800s with Charles Dow, they refined it so that if something was over, if the 50 was over the 200 and the price was over that, that was a bullish phase. Conversely, if the 50 was under the 200 and the price was below both those moving averages, that was a bearish phase, and what to do in those situations. So I started studying that. I started studying the scans that they were using for finding breakouts over those phases, but also using relative strength and using accumulation and distribution days on volume, looking at market internals. All of that started to become what they were doing became what I was doing. And that gave me the ability to assimilate a lot of this information along with what I already knew about trends from trading all these years and put it together. And I think the third most important piece for me in being able to see the future was my economic modern family, which I developed. I didn't even know what the heck why I was developing it, other than it was a combination of, I mean, truly, that's honest. I fall on things sometimes. And this is where I've been very, very fortunate as sort of a intuit in a sense, is I will fall on something and feel very strongly about it, create something or say something even on the air boldly, without really having a lot of statistical evidence behind it. And then I find the statistical evidence. And that's exactly what happened with the economic modern family. I started realizing that everybody was watching the NASDAQ, everybody was watching the SPY, but while they were rallying back through the decade after, really starting from like 2015, 2016, 2017, 2018, IWM, the small caps were not necessarily following in kind. And then I thought, okay, well, small caps, that's manufacturing US. That sounds important, more than NASDAQ, which is more international, which was getting big corporate buybacks of their own stock, which was getting tax breaks, et cetera, et cetera. What's really representing the economy? The Russell 2000 companies that have a small capitalization that are all within the US. Then I'm like, okay, what else is really super important in the US economy? Oh, the consumer, duh. So then I started looking at granny retail, and I decided XRT was the right ETF because it was a good blend of e-commerce, discretionary, and staples. So you got a good idea of what the consumer was doing. Then I was like, well, what did Charles Dow say? Well, you have the transportation index. Oh, transportation. You can't have manufacturing in a retail area of consumers without knowing what the demand side looks like. And then I started building, okay, semiconductors, Silicon Valley, super important, biotech, also super important because obviously United States had been a big innovator in terms of biotechnology through the years. And then I added regional banks, which was, I think, the most interesting that I would fall on that, because I decided that if I really wanted to look at the rural US and what their savings and borrowing money look like, you don't look at Citibank and Bank of America and Wells Fargo. You look at, Fifth Street, you look at some of the smaller banks through the Southwest banks and the other banks that have been a really important, Capital One, these banks that were really going to give you an idea of what the real person in the US was doing. And that became my family. I added crypto later on. But once I started looking at this family and getting the research in behind it, I'm like, damn, this stuff works. And here's a classic example, Joe. 5-6 weeks ago, KRE, which is the ETF I like to use, I call him my prodigal son, or the regional banks started breaking down while everybody was getting really super bullish before we had the SVB and the whole banking situation that happened.
I was just about to ask you about this. So, yeah.
And I'm like, wow, that can't be bullish that regional banks are breaking down, because this is the heart of America here. Is people aren't saving money, and people are not borrowing money, and interest rates are going up, and this regional bank situation, and then boom, that news hits the story, and you could see KRE tanked, and it brought the market down. So that's the kind of thing I'm saying, is that it sometimes, for me, it starts out with an intuition. And I'm fortunate that way. Like with gold, I started talking about gold and sugar in 2020, and gold, has traded up over 2,000 an ounce now, and sugar has traded about, let's see, maybe 150% higher than where it was. Both outperforming the markets. Why did I see that? Because I was able to be a student of futures markets where other people aren't. And I started realizing if the modern family is freaking out, If the modern family's freaking out, that must mean something. Oh, unstable conditions. Oh, okay, well, let's look at gold. And also let's look at food prices and reflected through sugar. So, this is how it all kind of works together. It's that I had market gauge giving me a foundation of a navigation system with phases. I had my way of being a special ed teacher, having to explain it in form of a visual of a family to explain the market, US centrics. And then, of course, I had my futures background to realize that after 40 years, it was probably time for raw materials to go back up again.
So a little bit of experience as you put this together. But interestingly enough, so you said like, Modern Family was freaking out. I'm assuming that for you, obviously with some of the screens that you guys create at Market Gauge, that's when you're starting to realize when to get out. So for like, an average consumer, actually there's a ton to unpack here, but for the average consumer that's just getting into this, and let's say they're trying to watch a stock and they really don't know when to get in and when to get out. My reco, I'm sure yours is probably going to be the same, but although I don't want to speak for you or put words in your mouth, but they should probably find some system at least to start and learn, not just go in there and buy and do a gut of, okay, I think it's high enough, I'm going to sell, because that's not the way you should really trade. You should definitely buy into spend a little money or do some research. There's plenty of online materials, but do some research. And this is my advice to advisors. If you're buying into a money management system, stick with it. Don't keep changing your mind, and don't use your guts to not go with what the numbers and the system's actually telling you. Cause it sounds like for you, you're pretty systematic with how you do things personally.
Oh, completely systematic. I have to be, because I ran a service for 14 years where I was leading hundreds and hundreds of people into any trade that I wanted to do, which means I had to explain to them, and also to the media, and also in my daily blog, why. And it couldn't just be, well, I like it, it's a good company, it's got great balance sheets. To me, I'm sorry, that's all bullshit, because that is ephemeral, and all of that can change on a dime. I had to explain it as, okay, there's a fundamental reason. I mean, for example, GLD, my people, I don't have the service anymore, but we have one position left in the portfolio because it just hasn't come to completion yet, but that's gold. But when we bought gold, I said, we're buying GLD because I think things are starting to get a little bit unnervy out there. People are looking for inflation in the wrong places. The dollar looks like it's going to decline. The global geopolitical situation is not great. We're having more of a deglobalization. You have the China situation now aligning with Russia and the Middle East. You had Ukraine. You had all this stuff going on. So I had to give them a fundamental reason. But if I just bought gold just like this, it actually went down initially. So I waited to buy it when I knew that it had a gap down and then a gap up the next day, and whammo, I had a risk point. And that risk point was based on the average true range of that particular ETF that I was doing, GLD. I wasn't buying futures. And we've taken profits at this point. We still have a tail. I mean, everything is systematic. And so you mentioned about, what you're doing and what we're doing. All of this stuff I'm telling you about, knowing which sectors to go to, knowing how to use technical analysis, knowing how to use market breadth, knowing how to use moving averages and phases, all of this is really, again, going back to what you're doing with us and what we're doing with you. We have made this in a way of 10 to 12 different quant models that you can now choose blends to take advantage. So whether it's global macro or sector rotation or the alpha of the actual market, or it's small caps or NASDAQ All-Stars, this has been the most exciting period of us and our affiliation, because what we've done is take all that education and all that love of teaching people and giving them an ability to be able to have a cross-section of exposure with real risk management. And if they're too busy to do it, what Tactiv and what you guys are doing is doing it for them, and where they don't have to be running $100 million to do it, but they can do it with relatively small amounts of money. And so everything I'm telling you about, it sounds discretionary, but it's all been automated now for the most part. And James Kimball, who's been working with us for over 10 years, has been a huge, huge part of that, because he's really helped write the code for the ideas that have come from all of us in terms of everything we've learned over the last 4 decades.
Yeah, as long as he doesn't hear this, if he's pretty close to you, I consider him your back end super genius. But
yes, he's actually walked out of the room, so his head
perfect.
Won't get big.
Let me pivot to this just real quick, because we have about 15 minutes left, and
Okay.
I mean we can go over a little bit too if we need to, but I also want to respect your time because I know you're super busy. You're going back to what we originally talked about when we started this.
You froze for a second.
Am I back?
You back.
Okay, perfect. Well, going back to what we were originally talking about before I hit the record button, you've been on TV so much, and usually it's for a couple snippets at a time, and maybe they want you to talk about a certain sector of the market, or maybe they want you to talk about a certain stock, or maybe they had you talk about the collapse of Silicon Valley Bank the other day. You don't get a chance to really describe, who you are, the messaging you really want people to understand about you and Market Gauge. Maybe give us a little bit of that. What do you want people to understand about Market Gauge, and what do you want people to understand about yourself that you don't get the time, during a special when you're on Fox or anybody else?
Well, I guess you mentioned in the beginning that your goal is really to be able to put together business, fitness, and what was the third thing?
Positivity, of course.
Positivity. How could I forget that? And that's really been something that the doctrine of my entire life. My dad died young of cancer, and so I had my mother, who's still alive and living with us, close to 90 years old, and the Russian side of my family that lived to well in their 90s and 100s. And then I had my father's side of the family where his sister died at 52 and he died at 64, and my grandfather died at 42. And so I was always conscious of the fact that when you have 2 big genetic codes, one that could kill you really young and one that might make you live very long, you don't know which it's going to be. So I've always taken very good care of myself. So that's really where the balance comes in. It's so important to be positive, live as happy a life as possible. The lessons I've learned from trading is cut your losses, not just in the market, but in life. If something just doesn't feel right, leave it, whether it's a human being or a situation. Get out.
I'm getting better at that myself. It's taking me time.
No, seriously, these are great metaphors that I've lived by. In terms of my diet, I live it's almost ascetic life in terms of what I consume. That doesn't mean I never have a drink or I never eat a piece of cake or a French fry. But if I do, I balance it out. The next day I'll eat more salad and more greens, nothing fried, drink more water. In terms of my physical being, I exercise, I hike, I go to the gym. And then in terms of my spiritual side, which is really where you remain positive, I am a huge proponent of prayer, how it looks for you. You can never dictate, and that's one of the big problems we've had, in the history of the world, is people try to dictate who you should pray to and how you should pray. I'm not at all into that, but my own personal prayer has to do more with asking for obstacles to be removed for clarity of mind so that I can serve, however that looks, number one. And number two is, if there is an obstacle being put in front of me, know that that obstacle is there for a reason. I may not understand that reason at the time, but if you accept it as there for a reason, that leads ultimately to being in a positive state of mind almost all the time. And that relates to business for sure. Often my prayer for removing obstacles is clarity of mind so that I can see trade, so I can go on the media, so I can talk to people, so I can serve. And sometimes it's so my dear friend who's having long COVID and major problems can have the obstacles removed for better health. It's like, it's just a path. It's like everything I do is systematic. I mean, sounds boring maybe, but I got to tell you, I've had a really good life as a result. So I try to share that as much as possible, that knowledge and that simplicity, because people get way overcomplicated about everything, and it doesn't have to be that complicated. Does that help?
No, that was great. Maybe I have to have you back for the positivity portion of the podcast at another time, but that was great. I think, what I've learned here is that you definitely need your own podcast to just go on Mish's rants about the market. Cause I think that a lot of people are going to want to see that in general. I mean, you know this, you get booked all the time. I mean, you're super intelligent. You pay attention. You've got this, amazing track record. And, I know a lot of people want to hear from you, so it might be good to get that going. I'd love to help you guys. So just know that Keith's in the other room.
Yeah. Well, yeah. When you asked about market gauge, I mean, what's really amazing is we know that relationships come and go, particularly in business. But I met Keith 40 years ago. Jeff, how many years ago with Jeff now? 34 years ago. We all met. Actually, we met Jeff a week before Keith and I got married. And here we are all these years later. And we're very different, but we all have the same goal, which really has been to help people. That is what drives us more than anything. And it's amazing to find two other people and have a triad, if you will, of power to be able to do that. Jeff selflessly teaches webinars all the time. Keith spends his weekends writing an outlook to give to people so that they can see what's setting up for the next week or what happened in the week before. And of course, yes, my media appearances are obviously not all benevolent. We're trying to get recognition to our company, of course. Yeah. Who doesn't want to make money? But really, when I go on, I say, yeah, people should look at regional banks coming into this week, I said to Charles, because they may have a double bottom. And if they bottom, whatever the naysayers are saying, doesn't matter. It's telling you prodigal son has gotten his money back from the governments or from the Fed, and it's helped and it's working, and let's get more positive. That's where to look. If I can tell you where to look, I'm going to tell you where to look.
Well, you hit the money on the head. You wanted to help as many people as possible. I think that's missed though during interviews. I mean, obviously it seems you're very specialized when you're on those shows, and I've done a few media appearances, nowhere near like yours, but just a few. I jumped off primarily because, I kind of noticed I didn't want to go down the path of being the stock guy. I was like, there's somebody working with us that's way better at understanding the economy and way better at picking things than I am. So we'll let Mish do that. I like to come on and talk about more just finances in general, what helps people from, working with advisors or with their personal finances. That's more my forte because that's my background. But you also wrote a book, and I believe you have a second one coming out, right?
Well, we're working on more on the economic modern family. It may not look like a traditional book. It may be more of a visual in terms of, because we have the characters. And really basically more about the actual characters, who they are, what they do, and then some anecdotal information showing how they've not only predicted major tops and bottoms, but also when they're disparate versus when they're all working together as these incredible opportunities to assess what your risk should be, your risk tolerance. I mean, and that's really, if there's one thing you should be asking your advisor, you, Joe Public, or Josephine Public, to be more PC, is what's your risk tolerance? What's the risk? I don't want to be aggressive in my risk, or I do want to be aggressive. I want to be more moderate, or I want to be conservative. And that's really, I think, the most important thing is if you ask a manager that, and they don't have an answer for you, that should be a big heads up.
Amen. So that goes both ways. I've had this conversation, and I don't want to go off into another whole topic here, but just on that point, had the same conversation with our advisors lately because they've been beat up over the last year and a half, 2 years. And the challenge is really understanding your client's risk tolerance. I mean, understanding inside and out what their threshold is in a financial plan, in the markets, because a lot of times they tell you one thing, but they can't handle another. So you have to really dive into that. And I think according to the SEC, there's this, standard questionnaire, and as long as people answer it and they get the score, that's their risk tolerance. And that's what advisors go with. I think it needs to be so much more than that. But most firms are just set up to do what's required, not necessarily to go that extra mile.
Right.
So that's the first thing that we've been talking with our advisors about is like, start diving into that, because you're going to have a happier client if you can understand that. But from the client's perspective, what you just brought up, asking your actual advisor, what is their risk tolerance? Because they have their own biases and tolerances, and they're going to be looking at their clients' portfolios. And if they get scared and they can't handle the appetite of the client, they could make a decision that might not be the best decision. So, and then adding on that third layer, if you're going to find a money manager or somebody that you're going to follow a system. So if advisors are going to find a market gauge or anybody else, what are their procedures to manage risk, and when are they on or off? And, if they're okay with an 80% loss to get 110% return, because there are managers out there that are like that, that might look really cool on paper, but you're not going to have that tolerance as an advisor. Your clients are definitely not going to have that tolerance. And if you don't understand that, then you're not doing yourself a service either. So that's a good point.
Yeah, definitely.
Well, last thing, because we have a few minutes, talk to me about your background over there. What is going on behind the scenes at Market Gauge? What are all those screens for? People see that on TV, and then, it looks really cool in the background. What's actually happening back there? Are these real screens? Are they fake? What's going on? I know the truth.
Well, yeah, I kind of put the Market Gauge sign up to sort of prevent you from seeing my papers, my tangerine for later, and and all of that, my coffee mug that I haven't finished yet. But actually, so we use TradeStation as our major trading platform, but I also use stock charts for really doing more stock chart analysis, and we have a really good thing going on actually with stock charts, and I'm actually going out there to Redmond, Washington in early part of May to do some work with them in terms of forecasting, and I do a lot of forecasting with them. I'll be on Final Bar actually this week with Dave Keller. So all these black screens here, that's how I look at the market. I have a radar screen that's divided into all of the different sectors. And because of our proprietary software, I'm able to see, if you can see, actually, I'll bring this down.
Yeah, we want to see the tangerine. So there it is.
There it is.
Perfect.
And my book.
Yeah.
But you see those you see the multicolors on the radar screen.
Sure.
That is our proprietary software that tells you when something is changing phases. So remember, I mentioned before about I learned so much about phases when the 50 and the 200, where they are relative to each other, and where the price is. When the actually phase changes, and we use 6, it lights up and tells me that something is changing phase. So a red would be it's changing to a bearish phase, not so good. And the green would be it's changing to a bullish phase, much better. So then once I look at that whole 500 or so stocks that I have there in different ETFs, then above that I have my 4 chart screens. So I look at a daily chart, a weekly chart, a monthly chart, and a 30-minute chart. And then what you can't see on this side is my 1-minute charts, where I look at pivots and 30-minute opening ranges. And I put all of that together. So if something is changing a phase, it's often the best time to get involved, whether it's short or long, because you have a very tight risk, right? If the phase is a fake out, it changes phases, but then doesn't confirm, you get out. If it changes phases and continues to go up, you got yourself a winner. but I time it by using the daily chart to let me know what my risk is, the 30-minute chart to see where it is relative to some kind of shorter term price history. And I'm a huge proponent of the monthly chart this year more than any ever, because the 23-month has worked like a charm. So I put all of that together. And then on my other screen that's our open positions for all models on that screen. And then of course, just my normal communication. I have Twitter, email, I write it daily, I have my words. So that's how I look at a lot of computers every day.
Yeah, clearly there's about 8 monitors back there. And then you have stations with a couple other people next to you further down the line
James.
as well.
Yeah, and James got his own thing going on there because he's always watching all the model positions.
Yep.
And well, that's just one of the 50 million things that James does during the course of a day. And I'm so fortunate to get to sit with him every day because we actually. So I mentioned that we don't do discretionary trading as far as Mish's Market Minute Advantage service. After 14 years, I ended it. And so I think it's important to end with that and the reason why. And one of the biggest reasons why was that because we have developed all this algorithmic blends and models, and we have tools and everything else in courses, somebody in the company had to be available to the public to tell them what to incorporate when, what to look at. We have a thing called Complete Trader, which uses all the things we like to do, our tools of real motion and triple play and blah, 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 and spits out a scan of what's reversing, bullish, bearish, what's consolidating, what's continuing. And yet, with all this information, if you don't have somebody as the head teacher, right, to tell people every day, oh, by the way, this popped up on my scan, it fits in the macro, it's certainly within the condition of the market, it's going counter, it's going with, et cetera, then that was an important role I needed to take, as opposed to, let's buy GLD and here's your stop and here's your target and that's that. This is a much bigger role for me. And I'm so excited because I really wanted to have a bigger role with you. As you know, we've talked about this so often. So this is a great start today. Yes. So if use me.
We're getting it together. I mean, look, this isn't going to be the last time you and I are going to jump on and do one of these for sure. So if you're an individual investor, I would end with this. You can go to marketgauge.com. There are many webinars that Jeff will be doing, and there are tons of resources on the website. You can connect with Mish there, connect with Mish on all the different social media channels. Look out for her on TV. She's on all the time. Buy her book, Plant Your Money Tree, on Amazon, right?
Yes. Oh, well, actually, you can get it on our website. It's a better place to get it now. Yeah.
Okay, get it off the Market Gauge website. Now, if you're somebody that wants to start getting into investing, Market Gauge is a great company. They have a publication service. If you're wanting it to have it done for you and you just want to start with a small account and you're not ready for a financial advisor, that's what Tactiv Wealth is about. Tactivwealth.com is our auto trading robo platform. And if you're needing a financial advisor and you want an advisor in our network, we have tactivadvisors.com. And we can actually pair you. You can find somebody that works with Market Gauge and works if you have more financial planning needs. We have a network of advisors across the country, and we can pair you up with somebody that can help you. So there's a lot of resources between, our two companies, and we're continuously to build out, and we're trying to find, again, last thing, what I love about Market Gauge, they're constantly looking for improvement. You guys are getting better. You're always trying to have the best system possible for your investors, and we're trying to do the same thing. But Mish, right at the top of the hour here, thank you so much. This is the first financial podcast that's going out there, and we'll keep these going.
Thank you for having me on as your first guest. I love that. Thank you.
Well, of course. All right. We'll talk soon. Have a good day. Thanks, everyone.
You too.
Bye.